Good morning. It's 6:15 a.m. We've been in pre-market analysis for an hour and 15 minutes called the NASDAQ Gap Open Down List. And we have also brought to all of our MMTs and everybody in our database, client database, over a week ago as how the bear funds would set up. And we also brought to people the FXE and how to gauge that this is failing and breaking down and what that's going to do with the broader equity markets. The gap open down, let's go leading the way. Why? As we have told our MMT division, trading division, and our MMT apprenticeship division, is that the apprenticeships are being taught what liquidation, collateral liquidations within a broader market is, what is a mark-to-market, and various different things that happen that are totally outside. It's called capital reserves must be raised by certain types of institutions, and they always own the leading equities. They always own the good crop. But then, now that we're in an environment that the market is clearly displaying, is that because margin requirements have to be met and people who had collateral, which was their equities in gold, it was a collateral against other failing assets, then those capital requirements have to be addressed within the buy and sell tape. That means that people in some of the bigger firms that have to raise requirement will liquidate their leading assets because that's the only place they have left to go to. So when equities were being bought by some of these big firms, let's say, back in 2008 at the bottoms and 2009, those big winners were wonderful. However, because of their bad decisions and choices, there will be a special update for people. This is pre-market. However, we will be doing the complete analysis that we started over a week ago on where the bears were setting up their yearly lows and how they were consolidating before a potential big breakout there would occur and how you would get into it. So, one of the things we're always going to be looking for is the good equities that are gapping down in this holiday week. And the gap open up list on the NASDAQ comp pre-market, they don't even meet one qualifier. No, 1.00, none. 0, none. The gap open down list, though, well, hey, that means that when you get a gap open down list like this consistently, what that means is that those bear funds gap open in pre-market. So when you buy them at the close and hold them overnight and they gap in the morning, you sell them into the opening bell and buy the pullbacks. That's the side of the market that's working. And that's why tops, reversals, when key support levels are broke at support levels, then that's why the bear makes higher moves and the money prints that way. And you don't let the money print by you. You let that money print in your wallet and be on the other side of all the other transactions, because if there is a liquidation with bigger firms that have to sell their winning assets have to be sold because they were used for collateral for bad decisions that were done in their firms. Well, they have to sell those equities from the current price levels, but they do create great buying opportunities once it's out of the way. Happy Thanksgiving to everyone, and we will have a complete new series as the world changes, as the markets change. We know that we change based on what type of markets are going to be doing what. And we're very experienced in all of bear, bull, how a bear how a bear sets up a long-term support level and breaks out, how a bull ETF sets up a longer-term resistance level, time series highs before they finally collapse. And once again, uh, getting right down into the mechanical part of everything as we move forward, we will be addressing those issues in this video that I have described herein, so that you're not the person just sitting over there on the rock scratching your head as the money prints right by you. Happy Turkey Day, MMTs, left elbow gap downs. Remember, we're still early in the year. And longer term bases that happen on a weekly compounded level at support and they make higher highs. The bull is, we already called that reversal. That reversal has been there. And you broke to 12.15. The range was going to be 11, let's say 11.83 to 12.20. But now we also said that in the S&P 500 that there was a lower level of around 11.43 or 45, somewhere in there. That would be an area right in there. Back in the early consolidation, 52-week low index consolidations must be revisited and analyzed, because ultimately that would be the support level for the bulls. If they break through support, then the bears continue to run higher. Happy Thanksgiving pre-market. What do I do with pre-market? How do I take advantage? How do I understand where the world is? And why is it great to be here? Go ahead, look at all the stuff going on TV. Keep following stockmarketfunding.com. You will get the real truth.